Armen, Oaktree's been in the business for some time, so you're not kind of newly grabbing onto it. But what is it from the end client, your end client's perspective, that makes it either attractive right now, or what explains the motivation to get more involved than they have before? Is it some things going on in the banking industry? Is it the economy, or something else?
Yeah, I think it's the exit of the incumbent lenders, the decline of the syndication activities of the banks. There is clearly a need for a replacement source of capital from pension funds, insurance clients, institution, and even retail entering that market. I think the need is quite apparent, and the returns are very attractive given the risk. Today you're able to lend on a first lien basis at 11 to 13%, sometimes higher if you go into rescue lending or some of the more complicated situations or in industries that are a little bit harder to understand. But you could be top of the capital structure, often less than 50% loan to value, even in today's market with today's assumptions in place around a potential recession. And given that risk-adjusted return, our client base is quite attracted to that area. I think also through a cycle, if you do expect volatility in either security prices or the economy, trusting an investment manager that can navigate such cycles in a way that you have uninterrupted income and stability of performance against that broader volatile backdrop is also very attractive for especially a number of our institutional clients. And so across the board, whether it's retail or institutional, we're seeing a lot of inflow.
I think that floating rate piece is so critical. The last panel was just talking about the lack of attractiveness in traditional fixed income and the risk of the back book. I think the interesting thing about the floating rate nature, you're capturing all the front end of the curve opportunity, but you're not playing so much defense in your back book because the value of those loans is actually preserved as rates have moved. And so it's a very interesting dynamic and a little counterintuitive if you're used to traditional fixed income.